The price is breaking historic resistance, but the math says we are going much, much higher. Today, we are exposing the great silver squeeze, the structural deficit, the paper manipulation, and why the devil's metal is about to break the global financial system. To understand why silver is exploding, you have to understand the market illusion. If you looked at a screen yesterday, you saw a price, maybe $60, maybe $64. That price is a lie. That is the price of paper silver, digital contracts traded on the COMEX and LBMA. For every single ounce of physical silver that actually exists in a vault, there are up to 500 ounces of paper silver claims traded against it. Think about that. Imagine selling the same house to 500 different families. It works fine, as long as nobody tries to move in at the same time. For 40 years, banks used this leverage to smash the price whenever it rallied. But today, that game is over. Why? Because industrial companies don't want cash settlements. Apple needs silver for circuits. Solar manufacturers need silver for panels. You cannot build a missile with a paper contract. This is effectively a bank run on metal. The banks issued receipts for silver that simply don't exist. Now that the vaults are draining, the bluff is being called. They are trapped in a mathematical impossibility. They need to deliver metal they don't have to companies that cannot accept cash as a substitute. When the paper market breaks, and it is breaking right now, the price decouples. The screen might say $64, but try buying 1,000 ounces today. The real price is already substantially higher. You might be thinking, if the price is skyrocketing, won't miners just dig up more silver? This is the single biggest misconception in investing, and it's why the squeeze is mathematically guaranteed. Silver supply is what economists call inelastic. It does not respond to price. 72% of the world's silver comes from mines that aren't even looking for silver. It comes as a byproduct of mining copper, lead, and zinc. A copper miner digs for copper. If silver prices triple, he doesn't care. He isn't going to dig more copper just to get a little extra silver dust. The supply is locked. But it gets worse. We are fighting a losing battle against geology. It's called ore grade decline. 20 years ago, if you crushed 1 ton of rock, you'd find about 14 ounces of silver. Today, you are lucky to find 4 ounces. We are literally scraping the bottom of the barrel. It takes more energy, more diesel, and more explosives just to stay flat. Global silver production has been stuck at 830 million ounces a year for over a decade. Even if we found a massive new deposit tomorrow, it takes 15 years to permit and build a mine. Supply cannot save us. The faucet is rusted shut. But the demand? The demand is a fire hose that just got turned on at full blast. Silver isn't just money. It is the most electrically conductive element in the universe. If you want the green transition, you need silver. If you want AI, you need silver. Demand isn't just rising, it is vertical. The solar vampire. Solar panels are devouring the market. For years, manufacturers tried to thrift to use less silver per panel. That trend just reversed. New high-efficiency panels like TOPCon and HJT technology require 50 to 80% more silver than the old models. China installed more solar capacity last year than the US did in its entire history. By the end of this year, solar alone will consume 300 million ounces. That is 1/3 of every ounce mined on Earth, gone forever into a panel on a roof. 2. The EV drain. Your old gas car used a tiny bit of silver, maybe 15 grams. An electric car, it uses up to 50 grams. Every sensor, every automated braking system, every connection in a self-driving computer relies on silver because it doesn't corrode. In a car driving 70 miles per hour, failure is not an option, so they use silver. 3. The AI boom. Artificial intelligence runs on servers. Servers run on electricity. Every connector in the data center stack needs silver. As we build out the grid to support AI, we are plugging silver into the wall. We didn't choose this, physics chose this. And physics doesn't care about the price. These industries will pay $100, $200, or $500 an ounce because they have no choice. Without it, their product doesn't work. Now, in a second, I'm going to show you the specific math on the deficit, and it is terrifying. But before that, markets move fast, and YouTube videos take time to produce. If you want these alerts in real time, you need to be following us on X and Instagram. Links are below. Now, let's look at the deficit. Here is the math that Wall Street is terrified of. For 5 straight years, the world has consumed more silver than it produced. In 2022, the deficit was 237 million ounces. In 2024, another 200 million. Where did that metal come from? It came from the surface stockpiles. It came from the vaults. Think of the silver market like a giant hourglass. We have been living on the sand that was already at the bottom. But now, the sand is running out. Since 2021, visible stockpiles in London and New York are down nearly 40%. COMEX registered silver, the stuff actually available to sell, is down nearly 70%. We are burning inventory to survive. At the current burn rate, visible stockpiles hit critical levels in less than 12 months. When those vaults hit zero, the game changes instantly. It turns into a bidding war between Tesla, Apple, and the Chinese government. And, speaking of China, while the West debates whether silver is a good investment, the East is draining the supply. China knows that in a digital world, he who holds the metal makes the rules. They control the rare earths. They control the lithium. Now they are cornering silver. Silver frequently trades at a premium on the Shanghai exchange, higher than the price in New York. This creates a vacuum. Physical metal flows from the west to the east, and it doesn't come back. China isn't exporting silver anymore. They are hoarding it for their solar dominance. This is a geopolitical drain. The West is essentially selling its strategic future to the East for paper currency that is losing value every day. So where does this end? How high can it go? We look at the gold to silver ratio. Geologically, for every 17 ounces of silver in the ground, there is 1 ounce of gold. Historically, the price ratio reflected that, around 15 to 1. But recently, the ratio sat near 80 to 1. That was an anomaly, a mistake. Now the correction is happening. If gold stays exactly where it is, and the ratio simply returns to its historical norm of 15 to 1, silver would need to be roughly $260 an ounce. That is a 4x move from here. And remember, that doesn't require a dollar collapse. It doesn't require hyperinflation. It only requires the paper market to break and the price to reflect the physical reality. BNP Paribas predicts $100, but in a true shortage, where Ford and Samsung have to shut down factories because they can't get metal, the price has no ceiling. It goes to whatever is necessary to pry the silver out of your hands. This is not a normal bull market. This is a system reset. We are watching the end of the paper era and the return to hard assets. The volatility will be brutal. The banks will try to slam the price down one last time to cover their shorts. Headlines will try to confuse you, but you know the data. Supply is falling, demand is vertical. The vaults are empty. When the headlines finally scream, global silver shortage, it will be too late to buy. The premium on physical coins will be 50%, maybe 100%. The metal simply won't be available. Element 47 is breaking the system. The only question left is, will you be holding the paper promise, or will you be holding the real thing? And look, if you have specific questions about this squeeze that I didn't cover, our DMs are open on X and IG. Hit subscribe here for the deep dives. Class dismissed.